All right, folks, welcome to a market recap. This whole week, I did not take any trades, but I did have a setup on Monday. It was the SMT long, right, with the Monday candle, the Friday candle, as well as overall, we support take a trade on Monday because there was a daily CRT. As I said last week, that I'm gonna change the way I trade the market, where this will help me trade more pairs because the reason why most say don't trade more than one pair is because they're on the 15-minute time frame. So every day they're looking 15-minute time frame, looking at position moves. So they have no time to look at other pairs. Whilst the thing I'm transitioning into, whilst the thing I am transitioning into is making me wait on a daily time frame basis, right? Waiting for a daily dump it on old low and a pop over old high on a daily time frame and above, then take trades, right? Because on the lower time frame, if that happens, it's not healthy. My eyes has been getting fucked because of that shit. Now this is making me get some recovery, and it's actually way better, way healthier, right? Because if I come here every day, because the way I used to trade, as I said before, the way I used to trade required me to come into the market every single day. Yes, you have to, yes, I do have to come to that market every single day, but it required me to watch the market for 4, 5, 6, 8 hours sometimes, right? Was my new strategy. I'll come into the market, look for 30 minutes, 60 minutes, get out, right? But if it's a day when I'm trading, okay, cool. I could trade, I could be in the market for 4 hours. But gotta keep in mind, but when in 4 hours, well, aren't you still, being in the market for a very long time? No, because the other days I'm not in the market, right? 30 minutes, get out. 30 minutes, get out, right? Where I'm not every day 4 hours, 6 hours, because I could be getting done my other job done, right? I could be getting my fucking other business done and improve on my Shopify shit like that, right? Drop shipping. I don't do drop shipping, but it's a business plan with me, and my brothers. So I could be doing that. I could be coaching. I could be doing this. I could be doing that, right? Rather than just fucking, stay in the market for 6 hours every day. Come in the markets 5 a.m., 5:30 a.m., 6 a.m. Come in the market. Look at the market. Okay, I don't see a setup. I'm done. Right? Is that not? I don't see a setup. Just another chart. 10, 15 minutes analyzing, and eventually like, okay, this day I'm not gonna trade because market didn't dump below an old low, or didn't pop a old high, or didn't tap the daily range, the discount daily range, or pin the daily range. So I'm not gonna take a trade. Right, I'm done. Come back the next day. The next day comes around, okay, same thing. Okay, this day I'm looking for a trade. Market dumped an old low. I'm looking for a setup, so I'm gonna stay here for a little longer, then take a trade, then go from on there forward, right? So simple as that. Right, rather than just coming here 4 hours every single day, 6 hours every single day, look at the market with no setups. And the setup I do take, low probability is stopped out. And the highest probably setup occur on a daily and above. And you can see right here, we have gold and we have silver. I'm not gonna trade silver. I use silver and GPUSD as a SMT pairs, so they're secondary. And I use DXY, gold, and EU to trade. Right? I can't trade DXY, so I'm gonna trade EU. Simple as that. And why am I doing this? Since now I'm not in the market for such a long time. I'm in the market once every couple of days. Guess what? Now we could trade more pairs. If I wonder, well, how many pairs is a lot for me? How many pairs should I trade? I personally can't trade Nasdaq because religious reasoning. I can't trade S&P 500 because of religious reasoning because they have some haram stocks. So that indexes can be done, right? I can't trade futures. I can't trade. I can trade Bitcoin, but I have to go to a unregulated broker, or I can trade a profit way. But I will trade Bitcoin in the future, right? I do currently do trade Bitcoin more on the spot side rather than the leveraging side, right? Because if I were to want to trade Bitcoin, I have to use the leverage, and the leverage is I can't use it, right? All the leverage, the way the leverage works is it's a leverage where I'm risking my own amount of size. I'm not risking the investor's money, right? So let's just say I have a 100K account. I'm risking 1%, 1K. So let's just say I have a stop loss, very tight stop loss. Let's just say in Bitcoin, let's just say my entry is at 20K, right? I have a 20K entry. My stop loss is at 19.5K, 19,500. My take profit is, let's just say 21K, right? That's like a 1-to-1 RR, 1-to-2 RR, I mean. So since we're going for 1-to-2 RR, now I'm not gonna risk the whole house, risk the whole, everything on this trade, like leverage 200x. I'm gonna risk 1%, right? It says I'm gonna risk 1%. What I'm gonna do is, since I have a very tight stop loss, rather than having a very huge stop loss, risking having high leverage, what I'm gonna do is have higher leverage, but not risk the investor's money and still risk my own money rather than risking the investor money. So why? Because I want to have a stop loss, right? That's the whole reason I'm doing fucking futures, to have a stop loss. I don't give a fuck about the leverage, because I never over leverage, right? It's too risky for me to over leverage anyways, because I have a high capital, right? Over leverage, then if the leverage gets fucked up, guess where my money gone? My money's gone, right? I don't have no more money. If you have no capital, you cannot trade. Simple as that, right? So that's that. And since we have a stop loss at 19.5K, entry 20K, and take profit 21K, we're gonna risk 1%. We're gonna go based on that. So let's just say we're risking 1%. We have a 1K position there. We want to risk 1% of 100,000, which is 1%. We have the stop loss. We have this entry. You know, the take profit. We're going to 1-to-2 RR. So what we're gonna do is, since this is kind of tight stop loss, we're gonna increase the leverage, right? I'm gonna increase the leverage, but not over leverage. We're risking investors' money, right? We're risking the Coinbase money or whatever money, right? We're risking somebody else's money. We're still risking our own money, not risking somebody else, because we have a tight stop loss, right? We are only willing to lose 1,000, so we kind of have a tight stop loss. So if we go take profit, we make 2,000, 3,000, etc., etc. We're out risking the investors' money because we have a stop loss and we have a light lock. We have a right size calculation, position size calculation, right? So simple as that. And this is a but wondering, well, like, is future still regardless haram? It's not, because it is haram, right? If you over leverage, if you use the investor's money, right? But what I'm doing, I'm using my own money. I'm not risking somebody else's money, right? If you can get that, if you can get that to digest in your brain a little bit. I'm never gonna risk 200x. I'm never gonna risk 100x, right? I'm never gonna risk too much. I'm only gonna risk 1% per trade. So I'm gonna risk 1% per trade. I'm gonna use whatever the leverage that requires me to use that 1% per trade. Then eventually use that, leverage the trade. Or I can just do spots, right? No problem, right? And most of the time I do spots. I have ETH position, which is in a leverage, but it's my own type of money. I think I'm saying it wrong a little bit, because going back, if I'm risking 1% and it goes on a 2RR, then eventually that 1K has leverage on it, right? So it's kind of messed up. But the 2K, the ETH trade, it has a leverage on it, and the money is you could say accepted, right? Where I'm not gonna use it. Okay. All right. I'm not gonna use it to buy drugs or do anything of that bullshit, right? I'm gonna use it in a good cause, give it charity. But I'm open ETH a lot. I'm only have, like, I don't have full, as I said before. I don't have full. I don't have my full position because I partialed and I got out because I thought it was gonna go down lower. My dumbass put out patience to Bitcoin, and that's what happened. I think I have 60% running or 40% running. I took out 40%. I'm pretty sure. I have 60% still running. I still have not partialed. I'm waiting for that 4.1K at the all-time high. Then I'm gonna get out. I'm not gonna hold to a new all-time high. Just get out over there. Boom. Right. Then got 4.1K. I'm gonna take out of it. 30%, then 30% runners, right? So 40, 30, 30. So plus that. But this week, I didn't have any setups. I didn't take any trades. This week was just a study for me, to be honest. I'm not gonna lie to you guys. As I said last week, I'm gonna be taking only dumps and pops of old high, old low on a daily time frame, and only use daily ranges. Only use CRTs, ranges, but not IRL to arrow on daily time frame. Only in the weekly time frame, and as well as I'm only going to be doing like that, right? So this week on Monday, I'm supposed to be a long position. On Monday, I'm supposed to have a long position, but Monday I had my bias wrong. I thought market should be still going down lower. You know, I was trying to be like a little smart ass, right? I thought Bitcoin gonna still go down a little lower. Let me get this the right spot right over here. So it's supposed to be. You know, I want to keep this screen big, right? Because I could chart more. The screen doesn't really matter. But on the weekly time frame, I thought we are gonna go down lower because we had a weekly, you know, higher roll to this weekly ER roll, without realizing this Ferrari gap is still respected. This Ferrari gap still market can go from IR to IRL, right? It's going to go IRL to ERL rather than going to IR to IRL. This doesn't make sense, right? Especially, how can you, you know, when you do this, you can't dig in, right? So you gotta do this to dig in, right? This is like inappropriate, but that's how life is, right? You know, if you're gay, you can't go like this, right? So it needs to go like this. So you can't be gay and have a woman, right? So you need to go like this rather than going like this. Simple as that, right? Simple logic. So market can go from IRL to IRL, needs to go from IRL to ERL. Right? Pause on that, man. I'm not a guy like that, all right? But I just do that to show you guys, right, what I mean. So market can go from IRL to IRL, it needs to go from IRL to ERL. And since you can't go from IRL to IRL, market first have the IRL, so market needs to go back to ERL, to this high. So we were wrong in our bias. Simple as that. I can't say much on a higher time frame. So yeah, after the Monday trade, now I don't have set up Monday, but after like Tuesday, I was like, yeah, I'm gonna go longs here because I have my bias wrong, right? My bias says, and one of my rules says is that if I'm bullish, right, I'm gonna look for a dump below an old low and eventually go up higher. If that dump below an old low get disrespected, I'm gonna not buy blindly. I'm gonna reanalyze. Then eventually see, okay, market wants to go down lower, so I'm gonna look for a probable old high, then go down below old low. Since the old high, old lows on a daily time frame, they literally, if dump below an old low gets respected, meaning it just goes down, then your boss highly to be wrong. We're gonna go back to bearish, right? Eventually look for a probable high, go down lower, right? Etc. Etc. Simple as that. Like it's baby shit, right? It's like, you know, anybody know this shit, and most of you guys don't know. It's the bad part. You gotta keep on, you know, learning. So on Monday, I had my bias wrong. So I was looking for bearish right now, and eventually I'm supposed to be bullish because I thought I'm a smart ass. Whoa. Market still down lower without realizing that we had S&P divergence with a quality asset, which was GU. GU pushed out the low, but EU didn't. So we had SMT. So we had SMT, CRT, So the reason why I thought market go down lower from this weekly IRL to this weekly ERL is because this weekly Ferrari gap and this weekly Ferrari gap was inside the CRT. So I thought, well, market go down below the CRT. Not below the CRT, you can go down below the Ferrari gap, disrespect it, inverse it, and go down lower. Retap it and go down lower. But since there's the SMT, the Ferrari gap didn't get disrespected. All the other pair did support the range low, but this pair didn't support the range low. So the Ferrari gap is still respected. So now we're going from, instead of going from a ERL to ERL, now we're going from a IRL back to ERL, right? Without trying to going for, you know, without trying to go down lower still, because there was SMT with a CRT low. So now since we have an SMT with a CRT low, this Ferrari gap is now valid to take a long from. Why? Because we're first looking for it to get into first. We're looking for it to get inversed because it went against it was inside of weekly CRT, so it's hard to get disrespected. But since we have SMT with a weekly CRT low, this weekly Ferrari gap, since we have SMT now, basically means one pair pushes it out, other pair doesn't. Now this Ferrari gap is back to being valid to take a trade a lot out of. So now we're going from weekly IRL back to weekly ERL. Simple as that. So that's what I had my bias wrong. So on a daily time frame, after Monday, we never had a setup. Only wondering, well, what about the Friday trade, right? What about the Friday? I'm not gonna take the Friday trade. I didn't take the Friday trade. Why? Because daily ranges, right? Market super low, super high, stable low, stable high, premium discount, right? I'm not gonna buy in the premium zone. I'm gonna wait back to come. I'm gonna wait for a OTE / discount in order for me to buy. So now going down to lower time frame. On the Monday, we had a pretty obvious long here. Monday was right over here. 8 a.m. with the 9 a.m. 9 a.m. push up the 8 a.m. high. You can see the lower time frame, the Ferrari gap right over here, right? You can see the Ferrari gap. We had a valid low. We had the right order block. We had a resistance block entry. Market tapped the resistance block entry. It went up higher, and you can see the Ferrari gap got suspected, right? The low of the Model 1 got suspected. So Model 1 is actually this candle, but since we had a Model 1, everything, this Model 1 followed all the rules, we're still valid, right? To take this trade, right over here, it went to a loss. But wondering, well, why did it go to a loss, right? My stop was down here, I got stopped out. What should have I done? Keep in mind, when the market makers are accumulating, do not stand in their way, because you need to let the market breathe, right? And this stop loss is fucking tight. I don't know how and why would you want to have such a tight stop loss. 1 second. The 2.6 pip stop loss. I don't know why you want to have such a tight stop loss. You need to increase it. But we'll look more RR. But keep in mind about the market makers, and as well as you need to let the market breathe. When the market makers are all the opponent, this price point is very strong to hold. But sometimes it can just get wicked out and go right back up higher. So as you can see, it literally got wicked up and went up higher, right? So you don't want to stand in the market maker way. What you want to do is increase your stop loss, add like 2 more pips, or put in stop loss below both your Ferrari gap, etc., just to keep you safe, right? Without getting stopped out and the markets are going your way. Because you need to let the market breathe, and you need to let the market maker, since the market makers are accumulating around here to go up higher, you do not want to stand in their way. Do not interfere their accumulation. Let them accumulate all they want, but once you have your entry, enter, have a good amount of stop loss, have a wide stop loss, let the market breathe, let the market accumulate. So when let the market accumulate, have a wide stop loss, let the market breathe. Right, so I will have your stop loss here, same target, and this trade, you would have still been in this trade for a very long time. Your target would have been still this high, and as you can see, this weekly 50 high it didn't get met, right? So you eventually just fully reversed. So since it didn't get met and you fully reversed, what now? Gonna have to hold, right? And eventually, if you're smart, you have to look at the quality asset. Not quality asset, you have to look at the different brokers on that weekly CRT high here. So if I go to FMXM, it didn't get met. If I go to USD one more time, and I go to different broker, Wanda, it still didn't get met. So this high didn't get mad at any broker. So if you do is you're still gonna have to like literally hold it off. And I feel like market should be retracing back down here, tapping the 50% mark without taking on this low and eventually going up higher, which I think will definitely happen. I want to see it happen actually. So yeah, this is the only setup we had throughout the whole week, which was a huge, humongous trade. And I mean, if you're smart, you would have had to, target here. And you overall, you're gonna target this high, right? You're gonna have to partial here, take out 70. Usually, what I do is with the high different trades, low to first, high different reward. After the weekly, if I have a high different trade, after the weekly CRT high, and if there's another target the market wants to go to, I'll take out 70%, and the 30% will lead to the high, right? Eventually, if it hits the high, cool, just made extra money. If it doesn't hit the high, it goes back down, cool. Now you got an insurance, you got a 70% insurance. You still made a lot of money without the market tripping your position over, right? So now you're still making a lot of money without the market tripping over your position, right? So the market, you're supposed to get out over here, right? So you hold it over here, then partial the weekly CT high, market muller back down, stop you out. Now you didn't make nothing, right? But you want to make something. Since you want to make something, what you gotta do is partial, have an insurance at the weekly CT high. Eventually, if it comes back down, stops you again, so you still made a lot of money. You made 70% of the whole trade, but you had 30% runners, right? The 30% runners could make you more money, or it cannot make you less money because you already made 70%. You already made a lot, so that means eventually you can break even right at the end. So that's simple as that. So yeah, quick little insight. What I do with my weekly CT highs and weekly CT lows. This is all I'm saying are from Romeo himself, by the way. This is all from Romeo. Since it's all from Romeo, he says that when you take profit gets hit, take out 70. Like when it's like near your take profit. So this without this take profit getting met, you could have taken out your 70% mark, right? You could have taken out 70% of your position. He says it's an insurance, right? It's an insurance for you to, to make money, right? Because the market, if you have a large winning size position, the market maker does not like winners, so you want to have an insurance to where you at least make money, right? Without letting it to go to the dust, right? Simple as that. So he says 70%, which is very huge, which is very nice. Right? 70% is a very good point. Partially 70% at the weekly high, they have a weekly, higher time target at the weekly, ERL, and 30% go to ERL. If it goes back down, you lose nothing. But if it goes up, you make even more, right? Simple, you want that shit, right? So you want to be greedy. Next lesson is always be greedy. Like about wondering like, why do you want to be greedy? If you have like, if your trade is going for a low different risk, high different reward, and if you're struggling with holding the trade, just be greedy, right? But be greedy like in a way where, okay, after this take profit, I'm gonna get out instantly, right? Because I try to take profit there, right? I try to take profit. Technically it says market's gonna go over here, so I'm gonna try to take profit here, but I'm gonna be greedy, right? But when you're greedy, you don't want to get out of the trade. You want to hold until you take profit. Once you take profit, can you still be greedy? No, because your market took out your position. Market, you take profit on the broker. So now guess what? Can you be more greedy? No, because the market took out your position, right? And this is just it's just for you to resolve the problem where you have a holding problem, right? It's just a way to help you resolve the holding problem. But in my case, I don't need to be greedy, right? Because I don't have no holding problem. If you do it. If you don't do it, right? Because I don't have a holding problem, so I can hold as much as long as I want without getting emotional. Because I've done this just so many times. As simple as that. So yeah, that's the lesson. So the weekly lesson is very simple, is to pay attention to how to SMT. And I did say right now, like a couple minutes ago, about the SMTs. Oh, what was I gonna say? I gotta think a little bit. I said whenever there's an SMT with a Pacific high or low, I'm going to still go against SMT until it taps the rejection block, which the rejection block is all down here, which never got tapped, right? Just reverse fully. And going like that is going to be a little bit different because how could I say this? Because in this case, the market never, there was no a low that had SMT, right? There was no ERL. So in this case, we were already supposed to go from a weekly IRL back to ERL. So since we had SMT with the weekly CRT, we are valid tick along without waiting for the rejection block to get tapped because the CRT can't have rejection block. There's no rejection block here, right? But when it will this candle, no, Paul, I'm talking about the CRT. I'm not talking about the this bearish candle, right? So this bearish candle, we're not going from a ERL to ERL, right? We're going from a IRL to ERL, right? So we can't go from ERL to ERL unless the cycle changes, which the cycle changing is no longer valid to me because now I said on a daily time frame, I want to look for dailies IRL to ERL, right? Primarily weekly, right? So we had a weekly IRL back to weekly ERL, but before we take this weekly IRL to weekly ERL, we want to take this weekly CRT. So we either want to have an SMT with weekly CRT low or soup it out, then go up higher. And if it soups it out, then this fairly disrespected. So the whole setup can change, right? The way the whole drawing is going to change, right? But in this case, it didn't soup it out. It had SMT, and there was no ERL because we're already going from weekly IRL back to ERL, right? But before we go from weekly IRL back to weekly ERL, we're gonna need to have to soup out this low or have SMT with this low before doing so, which we had SMT. So yeah, the lesson of the week is to pay attention to general liquidity, pay attention to high time frame CRT, pay attention to high time frame SMTs, and to only trade when the market dumps or pumps above or pops above an old high or old low on a daily time frame. And that's all the lesson we have. Is the next lesson is it's very easy for me to hold trades. And the next lesson is I'm gonna trade two pairs, right? I'm gonna trade gold and EU. Why am I not trading 3, 4, 5, 6 pairs? Although I'm waiting for daily pumps and dumps. To me, two pairs is enough. It's way more than enough, to be honest, because if this one is over it, I'm just gonna look at this one, and this one over it, go back and look at this one without trying to go 6 pairs, because usually you don't want to get analysis process. Even if I analyze 6 pairs, I won't have an analysis process, but the way my chart is set up like this, you can see how my chart is set up like this specifically. That's why I want to trade 2 pairs only, right? The reason I want to trade 2 pairs because of this way, right? Where I have the SMT pairs over here, and I have the main pairs going back and forth, right? Simple as that. So yeah, that's that. And thank you for watching. I'm gonna trade gold and EU. I'm gonna have analysis on those pairs as well. But yeah, this is my weekly market recap. Not much happened this week, just a quick lesson and a lesson about a week. So next week it's gonna be interesting because next week is the last week of the month. So next week we could be having some sort of a rejection of the high. If we go all the way up and reject above it or have SMT with it, we can use that as a short term to the downside. Because last week, even if we go to weekly, against the weekly IR to ARL, we're gonna use the weekly CRT as a height of internal liquidity because last week needs to retrace. Simple as that. And yeah, thanks for watching. See you guys later. Peace out.